blazing the bar, breaking ground.
How you doing, ladies and gentlemen? Welcome to This and That. I'm your host, Xander, where we're talking about this, that, and everything in between. I appreciate your patience with today's show. We've been working on a lot of things. I actually just seen some stuff where I can get us some better thumbnails, so y'all going to be seeing that coming soon. There's just a lot of stuff going on. Welcome to the show today, ladies and gentlemen. Today we're going to be doing last night's show, because I told you guys the sun doesn't rise if I don't do a show. So last night's show that didn't air yet, airing right now. Today's show that's going to air today, still going to air today at a normal time. We're supposed to be airing at around 10 p.m. Eastern Standard Time. So that is the direction that we're planning on going with that. It'll be 11 p.m. Eastern Standard Time, 10 p.m. Central Time, 6 p.m. 6 or 7 p.m. Pacific Time. But just note that if you approve, hit the subscribe button on YouTube, follow me button on Twitch, follow me button on Twitter. Whenever we go live, if you're awake, you're going to get a push notification on your phone. Then you will know that we are live, and then you'll be able to join in on the endeavor. If not, you have the opportunity of watching the post release of the show, because the show release, we got all kinds of stuff going on up here. We've got the old shows going on, the new shows coming up. We look like we're probably going to start having a couple shows a day, depending on how I can work out the time frames, because I still got a lot of branded content that I got to put out. And as you can see, some of that branded content turns out to be beneficial for you and for me. So I just let you guys know what all is good and what all is better. What's great, as I put my this and that thumb on it, we're still working out with the artists about the branded content that we have. Not the branded content, the album that we dropped, the This and That album. I have taken the extra steps to put the links to the album that is on YouTube in the description on YouTube if you're following us on Twitch or Twitter. Another reason why you want to go and subscribe to the channel on YouTube, so that you can go ahead and see that and have access to it. As soon as I get the links from all the places the song is sold, if you want to buy it and download it onto your iTunes, StreamYard, Streamlab, Spotify, Amazon Prime, Pandora, all of that other stuff, we've got ways for y'all to do that. So just send me a message if you don't have it, but you have the name of the song, so you'll know what to look for if you like the song. We're going to try to get back to putting the song full length on the show. We just got to wait until we get whitelisted to do that. So we haven't done that yet. But until that happens, we've got the 20-second clip in the beginning, 20-second clip in the beginning, and in the end, that is referring to the show exclusive songs. We got 5 tracks, though, on the album. So we're doing better than Nick Cannon. Beyond that, let's go ahead and I want you guys to recognize that if you want to be on the show, because the show is live, you can click the link in the comment section, approve the mic, approve the camera, and then you will be able to join the show in real time. And that will give you the opportunity to put your 2 cents in, as long as you're over the age of 18, and appropriately dressed, appropriate comments and statements. We do have some characters that come on here, but we try to keep this pretty appropriate. Some of the topics that we have are debate worthy. I don't have to agree with you for you to be able to put your 2 cents up on the podcast. You can completely disagree with me, and we will have an intelligent conversation where I will in no way, shape, or form insult your intelligence. However, while you're trying to insult mine, we have to make sure that we keep things appropriate. In the meantime, today is not going to be one of those debate-worthy topics, but you can try to debate this one. We're actually going to be getting into the difference between trading and investing today, which is what we were supposed to be talking about last night, Tuesday night. Today's Wednesday morning for me in the United States, because it's 5 a.m. right now, but we were supposed to air this at 10 p.m. last night. But apparently they disabled the tower for the internet service yesterday. So we had a while with trying to get the internet back up and going. And then after that, we had a lot of clients that we had to service. So I just had to fit you guys in after the internet started functioning, after I finished with all the ongoing clients, because a lot of my clients are in Asia. So I work overnight, and which international business. So here I am talking to you guys about investing, trading. I also talk to you guys about gender inequality. I also talk to you guys about the biases that occurs in our country and other countries, as well as how to self-improve and how to make better choices in your relationships, and how those better choices that you make in your relationship could also help you with making better choices in business. Because the fact that the Western culture is transactional, your relationship, your whole life is a walking business. And if you think that way, then you would be able to function that way, where you're not sacrificing yourself for somebody else's personal preference, and ultimately not gaining what you wanted to gain out of that engagement, which will then put you in a favorable position. Because instead of taking what you can get, or following the mindset that beggars can't be choosers, you can hold yourself to a higher level of value, which also hold yourself to a higher level of expectations. And if you behave the way you expect other people to behave around you, you should get mutual respect. And if you're not getting mutual respect, you're replacing the people in your life. A lot like companies replace employees when they don't perform to the work magnitude of the job title. So in today's conversation, we're going to be diving into the world of finance once again, where we're going to be seeing if trading can actually beat investing your money in stocks and bonds and trades. Now, I can tell you that this is going to be deep, but it is going to make sense. When it comes to growing your wealth, there are two popular options outside of real estate that often get thrown around: trading and investing. But what's the difference between the two? Because you can do them both. Which one is right for you is what we're going to be trying to find out in today's video. So while we're here on this live, we're going to explore the world of trading and investing and why it matters to your financial success. Because as we start creeping into 2024, the man hasn't even been inaugurated yet, and all these laws are hitting the table, where he said that he was going to change things, that we wasn't going to like what's going to happen, but we was going to be satisfied with the results. And I keep telling you guys that we need to start working towards making ourselves financially successful for the country that is about to be pay for your own self for the next 4 to 10 years. Because all of the stuff that he does, that is an executive order. That's a 25-year expectation. Everything else that's done in the immediate is actually going to at least exist up until a year or two after he gets out of office. So you have to understand that for the next 4 or 5 years, the way things are right now, as far as the changes that are being made in the economy that the women and other people that don't like, look, that's the way things are going to be. So when they start taking away those government funded programs, dismantling the educational system and all this other stuff, we are going to have to find a way to still receive those benefits that we got to pay for out of pocket. So I'm just trying to show you guys that we need to be able to learn how to put our money where our interests are, and have our interests in making more money, so that we're not working ourselves to death for pennies on a dollar just so that we can barely be able to make ends meet. We want to have an excess of funds. We want to have a facet of income coming from multiple different locations, where we don't have to wonder where our money's coming from, where the hardest part of our day is rolling out of bed and trying to think about what else can I do to make extra money, because I already got a bunch of money. My bills are already paid. I just want to occupy my time by doing something else that makes more money. That should be the hardest part of our day. Or even easier, if the hardest part of our day is calling somebody and say, hey, do you have any ideas for us to make more money? You know what I'm saying? Either way, we're not supposed to be tired, exhausted, mentally strained, working 18 hours a day and stressed out on a regular basis and still broke. So I'm going to talk to you guys about how we're going to take this mentality and just really put it into deciding, what are we going to do? Are we going to trade? Are we going to invest? Are we going to go into real estate? What are we going to do with the money that we're not wasting on insignificance? Because just as we talked about on, I do believe, Monday or Tuesday show, because my days are bleeding into one another. Just as we talked about on Monday or Tuesday show, we were talking about how the women are protesting the men. So they're closing their legs, allegedly, because of the birth control and abortion laws, which is fine, because now we're not renting sex from women. So that means that men can redirect their money from the adult industry to investing, which allows you to make yourselves more financially successful. And if you're not investing, you're day trading. If you're not day trading, you're in real estate. Either way it goes, you're putting your money in a place where you're getting 20 to 40% interest back on your money. That is what we need to be talking about. And today we're going to get into that. So one of the biggest misconceptions about trading and investing is that they're one and the same. That's not true. The truth is, there are two very different approaches to making money in the markets. Trading is about short-term gains, which You could do a trade bots, or you could do them by yourselves by watching the market in the evening time, making your trades in the morning time, letting it ride the wave for the daytime. But if in the event that a shift happens before lunch, you've got to be there to make that change. Otherwise, you lost a bunch of money based on a surefire thing that didn't turn out to be a surefire thing. The trading that deals with short-term gains is going to also be about making quick profits by buying and selling securities within a short period of time. This is sometimes a good thing, but it's sometimes difficult to do, and it takes a lot of attention. Investing, on the other hand, is a long-term game where you hold onto your assets for an extended period of time, riding out market fluctuations in hopes of earning a steady return. Many people think that trading is the key to getting rich quick, but in reality, it's the highest risk game that they've got. And one wrong move, and you could end up losing a significant chunk of your portfolio, if not your entire investment platform. And yet, some people swear by trading, claiming that it's the only way to truly beat the market. But is that really true? The risks associated with trading are very real, and they can be devastating. A single bad trade can wipe out your entire portfolio, leaving you with nothing. And the thing is, even the pros get it wrong sometimes. Did you know that you can actually bet against the market in a situation where you end up owing money after the deal is done? Those uncovered calls and uncovered puts where you're not actually backing the deal. And then if the deal goes south, you've got to put up capital to cover the loss. Yeah, trading is serious. So why do people still insist on trading? The answer is simple. The potential rewards are huge because it's high risk. It's like putting $1 million on black. That works in the projects, but if you do that at the casino, you could walk out of there with $1 million less in less than 15 seconds. The time it takes for that ball to roll around the thing and land on red, that's it. When done correctly, trading can be incredibly lucrative, providing returns that far exceed what you get from traditional investing. It'll be far more in a short period of time than what you would get from fix and flipping a house. It'll be far more than what you would get from residual capital every month from rental properties. But it is such a high risk scenario that when you hit it like hitting the lottery, you will get a large quantity in a short period of time. But for you to continuously get that high hit every time is not guaranteed. So you have to take your losses with your gains and have an overall balance between the two, where you're on average making a little bit more than what you're losing. But you're going to lose some stuff. That is something that you have to understand. What about investing, though? Isn't that a safer bet? In many ways, yes. Investing is more a stable approach than trading. By holding onto your assets for a long term, you're giving them a chance to ride out the market fluctuations and potentially earn steady returns. And yet, investing has its own set of risks, particularly in the form of inflation and opportunity costs. So, what's the truth about trading and investing? Is one really better than the other? To answer that, let's take a closer look at the pros and cons of each approach. Trading, for example, allows you to capitalize on market volatility, making it a great option for those who are comfortable with risk, typically people who've got money to lose. On the other hand, investing provides a more stable long-term approach, which can be ideal for those who are looking to build wealth over time. Trading may be suitable for those who enjoy actively managing their portfolios and can handle the stress of rapid decision making and volatile markets. Investing is often recommended for individuals looking for a more stable approach to wealth accumulation without the need for constant monitoring of market conditions. Investing involves a long-term approach where assets are typically held for years. Investors focus on overall growth and appreciation of their investments, over time. Trading is centered on short-term transactions, often lasting from minutes to months, where traders seek to capitalize on short-term price fluctuations. Investing aims for substantial returns through buy and hold strategies, often utilizing fundamental analysis to evaluate the asset's long term potential. Trading focuses on making quick profits by exploiting market volatility, often using technical analysis to make rapid decisions. Investing generally involves lower risk due to the long term nature of the strategy. Investors can ride out market fluctuations and are less affected by short term volatility. Trading carries higher risks as trades must make quick decisions, and the fluctuation in the market are not necessarily able to be postponed based on the fact that you forgot to make that trade, or something came up and now you're distracted from the opportunity, where if you were supposed to make that trade before 5 o'clock today and at 4:30 you're in something that keeps you until 5:45, you just missed out on your trade. The potential for loss is greater due to the frequency of trades and the reliance on short-term movements. Not to mention, if you're not paying attention to the shifts in the economy, when a short-term requirement for a trade or a short sell, or in any way, shape, or form, collateral damage management is required in trading, if you're not available or you're not aware that this is occurring, you will miss out on a substantial chunk of change, or lose out on a substantial chunk of change that you was not originally expecting to have. Now, traders can potentially achieve higher returns due to the frequency of transactions and the compounding effect of quick profits. You can also be more subordinate towards your long-term goals by only trading with your profits, where you will never lose more than your initial principal because you're only investing the profits from successful trades. However, this requires a deep understanding of the market dynamics and a high tolerance for risk. So if you went in there with $10,000, you made $100,000. Now you got $110,000. You can invest that $100,000, or not invest. You can trade that $100,000, invest the $10,000, where you still got $10,000 just making some money. But the day that you lose that $100,000 in a bad trade, you have to accept the emotional fallout that you're going to experience from the fact that you just lost 100 grand in less than 10 minutes. Now, of course, if you were on the other foot, where you were going to invest 90 and trade 10, you made 100 grand off of a trade, you put the 100 grand into an investment, you take the 10 grand and invest and trade that, so that the 10 grand can try to build you up another 100 grand. If you lose that 10 grand, you only lost 10 grand, not 100 grand. And that 100 grand should be making you more than 10 grand of interest back, which means that you didn't really have a loss. That is a type of risk that you can adhere to, which means your tolerance is higher for the loss of that 10 grand over the tolerance being lower for the loss of the 100 grand, if that makes sense. I'm here to make it make sense for you. Now, investors, while they may not see immediate gains, benefits from compounding over time and generally have more stable return profiles is going to give you historical evidence that suggests that long-term investments and strategies related to this often yields better results for most individuals compared to frequent trading. One expert put it this way: trading is about making money in the market, while investing is about making money with the market. And it's crucial to find the distinction between the two. When you trade, you can essentially trade by trying to beat the market, making bets on which way the prices will go. When you invest, you work with the market, using its natural rhythms to your advantage. Since trading requires constant monitoring of market conditions and price movements, traders must be able to analyze charts, understand technical indicators, and react quickly to market changes, which demands a higher level of knowledge and skill compared to investing, where decisions are often based on fundamental analysis over longer periods. The learning curve for trading can be steep, meaning you could lose a lot of money as you learn. Many traders report that mastering the skills necessary for successful trading is one of the most challenging things they can encounter. Investors may find the learning process easier as they focus on broader market trends rather than daily fluctuations. Trading can be emotionally taxing due to the rapid pace and potential for significant losses. Traders must manage their emotions effectively to avoid impulsive decisions based on fear or greed. Like when COVID happened, everybody pulled out, stock market crashed. A lot of people who was watching the stock market crash could have bought in when the stock market started getting close to rock bottom. And if you were buying into stocks like Bitcoin, when Bitcoin went all the way back down to 20 grand, you would have gained 70 grand if you would have put it in there and left it there and then sold it when it reached over 90 grand last month. But if you would have been trading along the way and you would have pulled out right as it hit 90 grand and you're holding on to the profits until it finkles all the way back down to 40 grand or 30 grand, you could buy back in with that 90 grand and have like 5 or 6 Bitcoins and work your way back up. In contrast, investors typically have a longer time horizon and can ride out market fluctuations, making emotional management less critical. So just like if you're riding the wave of a REIT where it's at a loss right now, so it's not paying out, but overall, over the year, you're still getting 12%. If 1 or 2 quarters you're not getting any money, but the rest of the quarters you get the rest of the money, so you're still averaging the percentage yield that the REIT insists on that they pay. You might not get a payment 1 quarter, but you might get the rest of the money the rest of the year, so you still got your money. So the fluctuations in the market didn't hurt you. See what I'm saying? Now, traders often deal with a variety of financial instruments, including stocks, options. And that's a difference between stock options and stocks. Options is when you're buying contracts where you're buying 100 shares at a time, and you have the option to do a put, which is a buy, or a call, which is a sell. And the difference between the two is if you have something to sell, you put it up for sale. Somebody gives you money to say, I'll buy it from you if it reaches these conditions. You put up a put, you're offering to buy. Somebody says, I'll sell it to you if it reaches these certain conditions. That's different from buying a stock saying, I have 1,000 shares of Tesla stock. Two different things. You have futures, and then you also have derivatives. This complicity can make trading more challenging, and it requires a deeper understanding of how these instruments work and their associated risks. Successful trading often requires a significant time commitment for research, analysis, and execution of trades. Because if you're doing it manually, you've got to sit there and click on each one of the stocks that you want to buy or sell. You have to click on each one of the options you want to set up. You have to do the research to make sure that you meet the timeline for these options. You got to double back and make sure that the market is still in favor of the deals that you set up. If they're not, you have to make a counter offer to offset the loss. So there's a lot of things that you have to do. And unless you're paying an accountant to make this happen, where every time you call that accountant, you got to pay a fee, or a broker, every time you call that person, you got to pay a fee. Either way, you have to put forth the effort to make sure that it's going exactly the way you want it to go, which requires you to put in a lot more effort than just simply putting your money in there and letting it ride the wave and just reaping the rewards on monthly or quarterly dividends. Many traders spend hours each day analyzing markets and executing trades, making it akin to full-time jobs, which means this isn't passive income. So a lot of people that are talking about passive income, passive means that it passes through you. That means it happened. You didn't have to do nothing for it to happen and it went somewhere else. That's passive. Residual income is that you're putting in effort to make something happen. And then you start getting the results of your efforts. You're putting in 8 hours a day between watching the market and setting up trades. You're working a full-time job in trading. Even if you are working for yourself, you're still working a full-time job for trading. If you're trading on your vacation. You're not taking any days off. You're just trading in different locations, which actually makes you a digital nomad where you're actually working abroad. You're working in different locations. You're not actually on vacation. You can call it a business trip because you went to another location to trade while you're still working. You never took time off. Think about that. In contrast, investing typically involves a more passive approach where investors can set their strategies and monitor them less frequently, meaning that you could put your money into that stock, leave it there, and just check and see if the percentage yield dividend distribution is still going to be the same. Check and every now and again and see if the company still exists, if the company is still in a rise. Google information based on that particular company, that REIT or whatever. And if it doesn't have any news reports where the company might be tanking or some of the higher level investors might be experiencing a negative fallout, as long as none of these things occur, you're Gucci. You just set yourself up for a significant gain. And you don't have to worry about nothing else. You just walk away from it. So just making sure that the stock that you invest in, like say you invest in Tesla stock, all you really have to do is Google a little bit of information about the technology that Tesla's been putting out and what the news says about the rise in dividends being distributed from the Tesla shares. Outside of that, you don't have to really do much else. That's a whole lot different than buying a Tesla stock while it's low, selling a Tesla stock while it's high, and then buying back a Tesla stock when it goes back down. Completely different. The learning curve for trading can be extremely steep, as we've learned before, and many traders report that mastering those skills necessary for trading is one of the most challenging things that they've ever done. And that's one of the things that I told you guys before, where you're looking at where investors may find the learning process easier than trading. And they're focusing on a broader market rather than daily fluctuations, which means that trading is generally harder than investing due to its complexity, the need for emotional discipline, and higher risk exposure in shorter time frames and greater time commitment. While both approaches have their challenges, trading demands more active engagement and expertise in market dynamics compared to relatively straightforward nature of long-term investing strategies. Ultimately, the choice between trading and investing should align with an individual's risks, tolerance, financial goals, and willingness to commit to time to the market's activities. Being able to pay attention to how the market is changing over time. Investing, typically different. Investing is going to involve a long-term approach where assets are held for years, even decades. And these investors are going to adopt more passive strategies, which requires less frequent monitoring and less decision making. In contrast, trading is going to demand consistent attention in the market conditions and price movement, often requiring traders to analyze charts and execute trades multiple times a day, whereas an investor really just puts his money in there and just leaves it there until he says, you know what, I had enough. Let me just wait. While both investing and trading requires research, investors often focus on fundamental analysis of companies and industries, which can be done less frequently. Like I explained to you earlier about the difference between trading when the stock is high versus trading when the stock is low, if you wanted to buy and sell the stock, as opposed to making sure that everything's still going good with the company where you could just walk away and leave your money there. Traders, on the other hand, rely heavily on technical analysis. And this is going to be continuous assets, continuously assessing market trends and patterns to make quick decisions. So you have to see multiple times a day when a shift in the market occurs and try to take action on it as soon as you find it. That's why you're going to find those day traders. They got like 20 screens up. They're sitting in this chair and they're watching 20 different screens. That's probably got 20 different stocks on it. And they're just watching the market shift on these stocks. And then as soon as the market shifts between monitor 1 and monitor 18, they start working on executing a trade. But the whole day, or the majority of the day while the stock market is open, and I think the stock market already opened in New York, you would start trading. and you would be trading until like 2, 3, 4 o'clock in the afternoon based on what you see. It's a full-time job. Now, the short-term nature of trading exposes traders to the higher risks of losses in a short-term time frame. And this can lead to the anxiety pressures that I told you guys before, especially when traders do not go in the direction that they wanted to go with their trades, as opposed to investors that can afford to hold on to their investments through the market downturn, allowing for the recovery over time. So you could win in a good trade or a good investment where you might have had a downturn at the beginning of 2024 where Bitcoin started going back down, and then Bitcoin went back up. And then when it was 3 times more than your original investment, you could still pull out, but that longer term over a year was more of a successful long-term investment than the day-to-day operations of the Bitcoin fluctuations. Think about that. Since trading is going to typically require a deeper understanding of market dynamics and technical indicators while managing risk strategies, the complexity makes trading more challenging for many individuals compared to investing, and it's not really as accessible as, for example, starting to get into trading. Again, with that massive learning curve, you got to have money to lose. You can invest in something, you can trade for the sake of trading with a small amount of money, get you a small amount of gains, and then take that and recycle it. But you have to learn what's not in your favor, and then you have to put back in what is in your favor. The long-term growth from investing, where I gave you guys several REITs that were in between 7 and 20%, where if you threw your money into some of those REITs that are giving you monthly dividends, you could literally put your money up there as an investor, leave it there for the bulk of the year, get back 18% out of 12 months of leaving your money somewhere, and then take the interest that they're paying you and put that into a trade, where the principal from your investment is never lost, and the interest from your investment that goes into a trade, if that's lost, you're just back to zero. You never actually lose any of the principal money. But when you think about the money that you had from the profits gained that you lost in a bad investment deal, that learning curve is emotionally stressful. And that's why we talk about the learning curve for trading and how it can be extremely steep. Because if you won $1 million lottery ticket, how emotionally devastating you would be if that lottery ticket got lost, stolen, or destroyed before you could cash it in. That's the feeling of losing out on a stock that's worth a high value because you made a bad trade or failed to make a trade at the right time. But you have to understand that in trading, somebody's got to gain and somebody's got to lose. That is how the stock market works. 2 people are going to put their money up, but one person is going to come back with less than what they started with, and another person is going to come back with more than what they started with. It all depends on which person you're going to be. And you can't guarantee that you're going to be the person that's coming out on top every single time. Even if majority of your trades are successful, even if you're operating between a 60 and 80% success rate on high returns, where you're losing 40 to 20% on low losses, where the difference between your losses is offset by the rapid increase of gains, where your overall portfolio is a positive portfolio, you're still going to lose some of the time. But if you gain more than you lose, the losses are the cost of doing business. And you have to have the trade reports that allow you to master the skills necessary for successful trading, which is one of the most challenging aspects of the encounter. Investors may find the learning process easier as they focus only on the broader market trends rather than daily fluctuations. Investing is generally easier than trading due to its passive nature and low emotional stress and lower time horizons or longer time horizons and simpler analytical requirements. While both approaches have their challenges, trading demands more active engagement and expertise in market dynamics compared to relatively straightforward natures of the long-term investing strategies. So ultimately, the choice between investing and trading should align, as I've told you guys before, with your individual risk tolerance. And what I mean by that is that if you could put your money up for 20 years and leave it there, you ain't got to worry about it. But if you're the kind of person that puts your money up today and you need it next week or you need it next month, you need to trade. That way you can do what you can do with that money and then get the profits out of that and use the profits for what you're going to spend on next week or next month and take the principal and put it back up for another trade. If you can't put your money up for a long period of time and leave it there, then taking the investor route is not right for you. If you don't need that money, you could potentially put it somewhere and leave it there for a longer period of time, which means that investing might be right for you as opposed to trading, because as you learn how to invest, you could take the knowledge from the investing and use the profits from investing to trade. If 90% of your money is invested in long-term investments, the interest from those long-term investments can be put into high-stakes short-term trades, where now your portfolio in and of itself is both going to have long-term gains and short-term gains, where the losses from short-term trades is offset by long-term gains and short-term gains, which means that you should be operating at 75% success after you've gone past your learning curve. So what's the key takeaway from all of this? Truth is, there's no one size fits all approach, because I just told you about how using both of them as opposed to only relying on one or the other. The ability to make money in the markets is definitely there, regardless of which direction you decide to go in. Trading and investing both have their strengths and weaknesses, and the right approach for you will depend on your individual finance goals and risk tolerances. So understanding the difference between trading and investing is crucial for your investment success. By recognizing the risks and rewards associated with each approach, you can make informed decisions about how to grow your wealth. Remember, it's not about which one is better. It's about finding the approach that works best for you. And never put all of your capital in just one direction. When you start investing, you might grab one high interest stock or bond. And then as you get more capital, you want to invest in a different stock or bond. Then you want to invest in a different stock or bond. Throw some money down on some gold or silver. Put some money down on cryptocurrency. Put some money down on that you can hold out for day trading when you decide to start dabbling in day trading. Then you want to throw some money into real estate, where you can gain more profits off of real estate, or at least accumulate larger quantities of tax exemptable debt that you can utilize for your ability to invest in higher interest yields. Because remember, Trump said that you're going to have 15% for the lower income people, 30% for the higher income people, but 20% for the companies. All right. So if you're a company, and then what was he talking about? Like 13% for the high earners. I mean, if you're trying to be a high earner and you're going to put yourself in a scenario where you're still going to be capped out at about 20 to 28% interest rates that you can have tax deductions on as a business, as opposed to the city and state tax where you're not able to receive that, it's more effective for you to try to make sure that not only do you set up a business that you're going to invest under, but also managing the amount of money that you're going to profit from your investment that is taxable versus the debt that you can utilize as a financial benefit when you're going into real estate with the profits from your stock investments. So, where were we? Since you understand that neither one of these are inherently superior to the other, and you're going to choose between them or utilize them simultaneously to align with your personal financial situations and your personal goals, I want to make sure that you guys like and subscribe on the show, because if you don't forget to share your stories about investing. I know I got a guy that jumps on a podcast every now and again and starts talking about his Bionics account, his Bionics wallet. And I find it entertaining that he does the same thing. He throws up this weird password. Like, people are going to go and look for a Bionics wallet and throw these passwords in there and try to walk into somebody else's account. Yeah. But if you've got real discussions that you want to talk about, like the group that came in and was talking about the gold and silver and the agents that are involved in gold and silver, I strongly recommend that you guys go in there and start talking about it and in the comment section, because we could potentially pass information around that allows them, because it's common knowledge once everybody starts talking about it, and we can start talking about ways that we can buy, sell, and invest where we can make money for us. And if you have any experiences with trading or investing, days where you've made big sales or days where you've made substantial losses, go ahead and let us know. And if you're new here, like I told you before, make sure that you consider subscribing for the channel and hitting the membership, because any detailed information that follows the show usually goes into the members only areas, where that content is received by the members, where you'll be able to find more stuff related to personal finance and wealth building. Going forward later this afternoon, we're going to be talking about more things related to social interactions, relationships, dating concepts, as well as money. So just never forget that neither trading nor investing is inherently superior, and you just want to make sure that you choose the one that's best for you. In addition to that, you also want to make sure that you put forth the effort to do your research. I'm gonna do some research for you, but you do some research to follow up on what I told you. You want to make sure that you make it make sense for you the way I make it make sense for me. So I really appreciate you guys coming to the show today. And before I walk out the door, I want to make sure that I give a special shout out, because I see you guys up in there. Definitely throwing a shout out to you guys over there on Twitch side. So remember, Max Opposer, Rooterus, Reese, Liberty Twitcher, Mr. Pibbs, Light Blue, Red Void, Omni 81, Silly Emma, Calvin. I want to make sure that you guys, special shout out to all of y'all that's over there on Twitch, because I see y'all popping up throughout the week. I really appreciate y'all. I told you that it happens every day. This show happens every day. Before sunrise over here in the United States, it is going to air. So if you're following along, you're going to catch the show live. But if you miss it on Twitch, I am definitely putting up the post show so that you can watch it later. So if you missed the show at any point during the month, you could always go back and watch one of the live shows that you missed. And then you can follow up on some of the new shows, because all of our business and finance shows are capitalizing on information from past shows. Our relationship shows are building from last shows. So more often than not, you'll find out that I'm coining, hashtagging, or redirecting you from something we've already talked about in the past. So I encourage you to always take a look at all of the shows that we've got going on. And then if you have enough time, make sure that you jump in and give us your 2 cents on some of the topics that we're talking about today and some of the topics we're going to be talking about coming up soon. If you've got some topics you want us to talk about, because we still got to touch base on some of the other countries that could be financially suitable for our investment portfolios, any thoughts and processes that you want to throw down, you just let us know and we'll take care of it. Because on this and that, we don't just talk about one specific thing. We talk about this, that, and everything in between. And that's one of the reasons why we encourage you guys to like and subscribe, and then put your input into the podcast. With that being said, we are working our way into finalizing our primary air time of 10 p.m. Central Time. So for those of you that are finding the podcast at 6 o'clock in the morning, just note that we will be live at 10 p.m. This afternoon, because we go live every day. And today is filling my guarantee that we air every day before the sun rises. And since we didn't air at 10 p.m. last time, we aired now. So we will be airing tonight. So if you're watching us now, you're going to be watching us in about 14 hours, because we're going to be coming up later tonight. With that being said, I appreciate you guys popping in at the last part of our hour. You guys need to make sure that you like and subscribe as you're jumping in, because you're going to get so much information from me when it comes down to business, finance, and relationships. I'm going to make it make sense. I'm going to make some people mad. I don't really care. I'm going to make money while you guys are making money with me, or you guys are just going to watch me make money. Either way it goes, I'm good with it because I got mine. I'm going to try to help you get yours. If you don't have the answers to the questions, if you ask the questions, I can go find the answers for you. But if you don't have any questions to ask, that's on you because there's so much stuff that I done talked about so far. And I've also special shout out to Romania, Brazil, Singapore, Thailand, Philippines, where I'm talking about countries, Dubai. I'm talking about different countries, Vietnam, where making it make sense in those areas is just as effective as making it make sense here in the United States. So you can be successful no matter where you are in the world. I've talked about the different currencies between the US dollar, the euro, and BRICS. You can be successful no matter where you are in the world. You do not have to depend on the 9-to-5 job, the overnight graveyard shift job that you've been working on for the past 5, 10, 20 years. You can pull yourself out of that and work for yourself. All you have to do is first believe in yourself and look for another way. Where there's will, there is alternative opportunities. There is another way. And I continuously give you every week multiple ways that you can find another way to be successful. And with that being said, it is your choice, first person accountability, to do something different than the norm. Because if you've been watching this podcast every day for the past year, you have found so many different ways, so many different things has changed with the podcast to make money for yourselves, as well as watch me make money for myself. So you can't say that it's not doable because I'm doing it with you. The non-negotiable expectations for behavior that I encourage you guys to follow, I stand by that. Uniformity. So if it doesn't, if it doesn't make sense if I do it, then you shouldn't do it either. If it makes sense for you to do it, I should be able to do it too. If roles and situations reverse and whatever you think is fair because it benefits you ultimately becomes unfair when it doesn't benefit you, then it's never fair. With that mentality, you're able to treat your neighbors the way you want your neighbors to treat you. You're able to treat your friends and family the way you want your friends and family to treat you. And as I've told you guys multiple times before, put your effort into contracting out your resources. Instead of loaning money to your friend, do a short-term loan contract with interest. That way, loaning them money to help them bail themselves out of stupid situations benefits you. You're not just giving away cash because that's your homie. They will not borrow from you if they're not going to benefit from borrowing from you. But you're not going to loan out money if you're not going to benefit from loaning out the money. Somebody asks you for a couple $100, sure, at 10 to 20% interest. Or 10 to 20%, 200% interest, where you're talking about interest accrued monthly with monthly compound interest. So you borrow money from me today and you still owe me money in 2 months. That 20% stacked on top of 20%. So instead of you supposed to be giving me back $40, now you got to give me back $88. Either way it goes, you're giving me back extra money on top of what I lent you. That gives me more money to lend. So the next time somebody says, oh, hey, let me get some, draft up that contract, my boy. Don't just lend stuff out. Don't just lend your car to your friends. Because if you give your keys to somebody, you gave your keys to that person. It's not a stolen car. Even if you say bring it back. Now it's a civil action. It's a domestic dispute. You lent the car to somebody. Now you have to get it back. But if you rent the car out to them, they can hold it for as long as they want to hold it, but they owe you, just like a renter contract with a rental car company, they owe you a certain quantity of capital until they bring you back your car. So they keep your car longer than they were supposed to. Now you can take money out of them. There's ways to go about living your life. There's ways to go about doing things. There's ways that if you start acting transactionally, you can't be misused by the people in your life because they're not going to say, oh, come on. For example, you start making yourself financially successful. I got friends right now that if they find out that I got extra money, they're going to ask me, oh, you're going to give me some money? No, dude. Why? But at the same time, I also have friends that'll talk to me about business and they'll be like, oh, yeah, so, you're going to invest in me. What is my interest out of that? If it's not financially profitable, you got to make it make sense for me. Like I've got a buddy right now. He has a car insurance that he's trying to pay. He's got to put up $2,500 for 1 month of insurance. He told me, he's like, hey, well, if you don't give me this extra money, I'm giving him money out of the business he wants me to give him extra money to cover the cost because he wasn't paying the money after I gave it to him. He wasn't putting it towards the interest, the insurance. So I'm sitting over here looking. I'm like, I gave you a year's worth of interest money. You spent it. Now you're asking me for more money because you still owe them. He tells me, well, if you don't give me the money, then we're not going to have the insurance plan. All right, fine. I'll relocate. I set up a whole nother interest. Guess what? Insurance is less than $600 for the 6 months. You want $22,500 for 1 month. He's got a Hellcat on the policy. Not his, not mine. That is more than half the policy. I'm like, bro, I'm not paying for that. That makes no sense. My car costs less than $100 a month. That means that $1,200 would cover 12 months worth of coverage. You owe $2,500 for 1 month. That's not my coverage. So negotiations are as follows. I'm like, look, I'll transfer over to another policy. I can add your car onto the policy. You can cover your half. I can cover my half. We got to work out the distribution of wealth. If I'm turning profits on the business and you're actually not paying into the business, but I'm paying into the business, then we got to start negotiating things. Once we started coming to that understanding, he's like, hey, are you gonna throw some money down on my insurance? Let me ask you a question. Should I? If I got you $1,200 for the year in March, that was the 12 months, right? Why am I giving you extra money right now? I took my car off your policy. Well, I didn't take my car off your policy. I put my car on another policy. So if you take my car off your policy, you're really only going to save $100. That is it. The other $2,500 is between you and the Hellcat. So you got to now tell the Hellcat, which is what you should have done in the first place, is tell the Hellcat to compensate instead of telling me to switch, because you're getting paid from me. But now I'm telling you to compensate for what you're doing with the other guy that's not paying his worth. Because out of the $850 a month that the 3 cars cost, 1 car costs $450 and 1 car costs $100. You take the $100 car off of the policy. How much money are you really saving? Now, guess what? Your policy is down to $750 a month, but the other guy is only giving you $200 a month. How is that fiscally responsible? You were making the guy whose car costs $100 a month pay $250 a month to cover the cost of the guy whose car costs $450 a month, who's paying $200 a month. So now you have to cover the other $100. So your car that only costs $300 a month, you're now paying $400 a month for. So you and your buddy is paying for somebody else who's not benefiting from you. He tells me that his excuse for this is, well, if he ever needs a ride from the airport, he can get it. Bro, in Uber is like $20 to $40 from the airport. You are not profiting off of him owing you $350 a month additional to what he's actually giving you. You're not profiting off of that for one $40 ride from the airport. You could just buy an Uber and save money on that. Then come to find out, he's got the same coverage because he's an Uber driver also. If Uber's got a basic insurance coverage plan through Progressive, you've got a coverage plan through Geico that you're paying for. You could actually, since you're a full-time Uber driver, you can actually drop that one policy that the other guy is on and then turn back around. And true, you could take your car off the policy. You could keep the policy because you're doing your friend a favor. You could take your car off of the policy and just have him pay for his car. His car is the only car on there. So if he doesn't pay it and the stuff lapses, that's him. But you got your Progressive policy where you could turn around with your Progressive policy and just upgrade it to a full coverage thing where you're paying the difference off of your Uber company. Why not do that? Your insurance would be way less. Because if they're paying for basic and you pay for the difference in economy, you're only paying the difference. Wouldn't that make more sense financially? All I'm saying is that you got to be more fiscally responsible with your decisions. And if you're not fiscally responsible with your decisions, you can cause catastrophic failure with your friendships. You can cause catastrophic failure with your relationships. You can cause catastrophic failures with your business. You represent yourself as a business every walk of life that you every step that you take. And if you're making bad choices in your personal life, that's bad business. And bad business doesn't look good in actual business. If you're making bad decisions in business, that is bad, because your negative behavior from bad business will be inflicting on your personal relationships. Your personal romantic relationships that are bad has a negative impact on your personal social relationships. Because if you're having a tough time in your relationship, you're emotionally distressed with your friends. If you're having a tough time with your job, you're emotionally distressed in your relationship. If you're having a tough time with your friends and your romantic relationships, you're emotionally distracted from your job. So you have to remember that everything is intertwined with the fact that you are a transactional walking business, 24 hours a day, 7 days a week. And if you are not making decisions that benefit you, or your secondary benefiting you after benefiting somebody else, where you're going to invest in them so that they're going to provide dividends to you, then you're wasting your time and your money and your effort. And that is the wrong way to go. You're striking out doing that. If you're spreading yourself too thin, even those that claim to be Christians and you're following the path of Christ, Jesus had nothing and still had everything. He didn't spread himself too thin. He did what he could where he was. He did not exhaust himself to the masses. He did not give more than what he had. And he only asked for what he needed. And if he didn't get what he needed, he did without that till he could get more from somewhere else. So why is the most idolized man in society from historic times be able to live a richer life with less than the rest of us who are struggling to survive with more because of our selfish greed to get even more than that? Start focusing on your priorities. Prioritize yourself. Get yourself to a stable situation. Prioritize those that you love. Get yourself in a stable position with them where they're not getting more from you than what they're giving to you. Then prioritize romantic relationships where they're not getting more from you than they're giving to you. But you prioritize yourself and your business first. But do not sacrifice your business for your relationships. Do not sacrifice your business for your friends. Do not sacrifice your relationships for friends that are volatile. Do not sacrifice your friends for volatile relationships. Do not sacrifice yourself for family, for volatile family. You want to make sure that there is a stable, symbiotic relationship between you and all the people that you socialize with. And then you want to make sure that there's a symbiotic business relationship between you and the people that make money off of you. If that's not happening, you've got to change the dynamic. You've got to change the dynamic. If and when you change the dynamic, that is when you are able to make it make sense for you and make it make sense for them. When you start making money and they start making money because you're making money, you're still making money. It doesn't matter if you're getting 20%, doesn't matter if you're getting 10%, you're still making money. But your money should come off of the quantity of effort you're putting into this. So if you're putting in 90% effort, you can't be walking away with 10% profit unless they invested the money. If you're investing the money and the effort, you need to be getting 80 to 90% out of the deal. If you're investing effort and they're investing money, they need to get their money out of it before you get yours. But if you're not investing money and you're not investing much effort, you should not be getting 10, 20, 30% out of the deal because you're not doing much to deserve it. If you're just a figurehead, you're looking at 5%, 1%, and then the rest of it is supposed to be going to the person that's putting in all the effort and all the money. What you get out of the deal should be worth what you're putting into the deal. And if you're not putting much into it, you shouldn't be getting much out of it. I have this mentality that I say, well, I want 10 to 20% out of everything that I touch. So even if I'm not doing nothing, I'm still getting 10 to 20% out of everything that I touch. Why would I have that mentality? Because I put in enough effort to set you up and get you stable so that you're successful. And for the rest of the time that you're successful, I get 10 to 20% of what you did, which means that you get 80%. that allows you to put 60% back into the business and pocket 40%, where you still got 10 to 20% taxes, which still puts you at what? 20% profit. So you got 20% profit and I got 20% profit, but I set you up. That makes sense. You're not walking away with too much more than what I'm walking away with after all your bills are paid. But I'm not trying to get greedy about it and say, oh, I want half. It's not necessarily required because I'm not putting in much effort. I'm just getting tipped out after you do the rest of the work for the rest of the time. I just helped you get started. This is proper investing. So think about this going forward, ladies and gentlemen, as I wrap things up. So, ladies, I'm going to tell y'all because I've been and right now, while we got this 4B movement going on, I'm just going to tell y'all, ladies, it don't make sense what y'all do. I'm glad you're doing it, though. Big ups, because more women are going to be more pure. Y'all not going to be running around the streets throwing it back because you know that you could take something to get rid of your irresponsible behavior. Your body counts are going to be lower because you guys aren't going to be throwing it back so much because you can't go and get what you needed to get rid of the mistakes that you made. So more power to you. I want you to keep doing it. The longer that you guys do it, the better it is for yourselves, because those women that got like 3,000 body count and 200, 300 body count, you only got that because you know that you can pop a pill or get a fish hook and snatch it out, and you don't have to worry about responsibility. But those of you that are running out there and shutting it down, hey, so fellas, since they're not putting it out that easily anymore, y'all can invest y'all money. So again, I'm saying more power to you, right? But as long as the situation doesn't make sense, ladies, I'm going to keep asking y'all to make it make sense. So, ladies, please make it make sense. And fellas, I really appreciate y'all coming to the show. Much respect for y'all. I really appreciate y'all coming out here showing us love year in, year out as we walk into 2025. We're working on year 2 of the live podcast. So I really appreciate you guys showing us support. Make sure that you share the podcast with your friends and family members, people that you know that'll like it, people that you know that'll comment on it if they got something negative they want to say about the stuff that I say, because I'm going to say what you need to hear, whether you like it or not. Then I'm going to tell you what you need to know so that you can make yourself better. So make sure that you share this information to some of the people around your way, because more people listening, talking, and working on it gives us more to do. With that being said, ladies and gentlemen, thank you for coming to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. And I will see you guys tonight at 10 p.m. Central Time.